Welcome to the Crypto Ledger. Today, we are diving deep into a prediction that is so out there, it almost sounds like a joke. But it's at the very heart of a massive debate in the crypto space. We're going to explore a vision for XRP that could, literally, rewrite the rules of finance as we know them.
No, your eyes are not deceiving you. And no, those are not typos. These are actual price targets that are being seriously discussed for a single XRP coin. We're talking about a value so high, it is honestly difficult to even wrap your head around it.
So that's the big question, right? Is a price this astronomical even in the realm of possibility, or is it just pure fantasy? That's what we're here to break down. We're going to look at the logic behind this wild prediction and the very powerful arguments against it so you can make up your own mind.
So where in the world do these kinds of numbers even come from? Well, the argument isn't really based on speculation or a market hype. It's actually built on a single, really powerful concept: utility.
Okay, so the core idea is this. Imagine a future where XRP is the main asset used by every single bank and financial institution in the world to settle payments. While in that scenario, its price has to be incredibly high. Proponents say this isn't about making early investors rich. It's a fundamental requirement to make the whole system work.
And this whole theory really hinges on a key concept called fractionalization. The easiest way to think about it is like our own money. A dollar is great, but you need cents to buy smaller things. If one XRP is worth, say, $50,000, it can be digitally divided into millions of tiny little pieces. This is what would allow banks to settle any transaction imaginable, from a tiny micropayment all the way up to multi-billion-dollar deals, super efficiently.
So in this vision, you have to stop thinking of XRP as something you just buy and sell for profit. It becomes a core piece of financial infrastructure, almost like a global pipeline for money. The high price isn't a bug in the system. It's the main feature that makes the entire thing run smoothly.
But, and this is a huge but, there is a massive, and I mean massive, pushback against this whole idea. And it all boils down to one very familiar number: market cap.
All right, let's just do some quick math. If XRP were to hit just $10,000 per coin, its total market cap would explode past $500 trillion. It's a number so huge it almost loses all meaning. Just an absolutely mind-boggling figure, and we're about to see just how big it really is. And you know, speaking of numbers, did you know that 80% of the people who watch our The Crypto Ledger videos are not subscribed? Please help us with your subscription to continue uploading more valuable information and reach more people.
This chart really puts it all into perspective. A $500 trillion valuation wouldn't just make XRP the world's most valuable asset. It would be worth more than all the gold ever mined, plus corporate giants like Apple, all combined, and then multiplied many, many times over. For critics, this is the point where the entire theory just completely detaches from reality. The argument from critics is basically that this breaks every financial model we have. And they also make another really important point. You don't actually need a sky-high price to move a lot of money. You could use a lower-priced asset and just move it back and forth very, very quickly. Think of it as using a small, fast bucket to move water instead of one giant, slow-moving one. That speed is what they call velocity.
But wait, the debate doesn't end there. Supporters of this high-price theory have a pretty powerful rebuttal of their own. They basically claim that critics are trying to use an old, outdated rulebook to judge a completely new game.
This slide really gets to the heart of it. This whole debate comes down to two totally different ways of thinking. On one side, you have equity logic. That's how we value stocks, right? Based on profits, ownership, and market cap. But on the other side, you have liquidity mechanics, where an asset's value comes from its function, how well it does its job of moving money around the world.
And this, right here, is the core of their argument. The massive price increase isn't just a result of people speculating on it. No, it's a functional requirement. They believe that if XRP is going to handle the world's daily payment flows, its value absolutely must be high to make sure the system works.
So as we kind of zoom out from all this, you start to see that this debate isn't really just about the price of one single crypto asset. What we're actually watching is a clash between two completely different visions for the entire future of finance.
So, which path are we headed down? Is it a future of integration, where new crypto technologies just get plugged into the financial system we already have and have to play by its rules? Or are we looking at a future of replacement, where we're building a brand new system from the ground up, one that needs its own completely new set of rules?
You know, at the end of the day, that $50,000 XRP price target isn't really about a number at all. It's really just a placeholder for a much bigger, more profound question. Are we just trying to jam new technology into an old system, or are we building something so fundamentally different that our old rulers and metrics can't even measure it?
And that, right there, leaves us with the ultimate question. Does the future of finance need a new rulebook? As our world gets more and more digital, that's a question we're all going to have to think about. Thanks so much for watching The Crypto Ledger. Disclaimer. The information presented in this summary is for informational and educational purposes only. It does not constitute financial, investment, legal, or any other type of advice. The Crypto Ledger is not responsible for the decisions you make based on this content. Always conduct your own research and consult with a qualified professional before making any financial decision. Cryptocurrencies and digital assets are inherently volatile and carry a high level of risk.